Europe's dependence on oil and natural gas from a natural enemy long predates the existence of the modern Russian state. It actually goes back decades further to when the USSR was reigning in Eastern Europe and cheap Soviet gas was being pumped over the borders. Since those days, the amount of gas being imported has only increased, as it was by far the cheapest source of energy for many years. Germany and Italy in particular built their manufacturing bases around the principle of cheap energy from Russia, which allowed them to excel and beat out their other European rivals. Ever since the late 2000s though, relations with Russia have been moving in the wrong direction, and this has fundamentally shaken Europe as a whole, with the security and stability of its main source of energy never being so fragile. This reached a tipping point in late 2022 when the Nord Stream 1 and 2 pipelines were blown up by unknown actors and damaged to such an extent that it's unlikely they will ever be operational again. For the months that followed, the focus has soundly been on who is to blame, which state took this drastic action, but this is entirely missing the bigger picture. What we should really be focusing on is the economic impacts of this sabotage, what it means for the economy, the markets, and your investments. Now, the most apparent economic impact of this sabotage, and the one thing that the legacy media actually did cover in fairness, was the immediate increase in gas prices that we saw when this sabotage took place. Now, the reason this happened is very simple. It put the future supply of natural gas in Europe at risk, and so that was reflected in the price of natural gas. With no prospect of importing any gas through those pipelines in the future, the total quantity of gas in the European markets is very likely to be reduced for the foreseeable future. Now, this was covered across the media, but to call it low-hanging fruit is even a little bit too generous for them. For the entirety of 2022, the natural gas markets of Europe were being shaken by the war in Ukraine and the West's reaction to the war, and this was just another example of that. Prior to the invasion actually taking place, back when Russia was merely building up its troop presence, gas prices were steadily rising and spiking every time certain news articles would emerge. Then the invasion started and we really started to see gas prices ramp up. Russia was on the receiving end of an incredible amount of sanctions, and they sought to inflict some pain back at Europe, so they instituted various policies to put the supply of gas in jeopardy and ensure that if nothing else, energy prices would remain high all across Europe. They threatened to cut off supply altogether, and they routinely shut down imports for various reasons like maintenance, but in reality the true purpose was always to inflict a little bit of pain. This continued to escalate until the 2nd of September when Gazprom shut down Nord Stream 1 indefinitely, once again causing prices of gas to spike. Then, less than a month later, the sabotage would take place where explosives were placed underwater along the 2 pipelines and then detonated, destroying the functionality of the pipelines entirely. As mentioned earlier, this was covered by legacy media outlets as natural gas prices spiked from €175 per megawatt hours to 206, an increase of about 17% over the matter of hours. This contributed to an increase in the gas bill for an average German family of about €1,400 per year. What wasn't necessarily covered by legacy media outlets though was the fact that gas prices then proceeded to steadily decline to where they sit at the end of November at around €120 per megawatt hours, a drop of about 40%. The reason for this drop may seem a little bit counterintuitive at first, but it all comes down to uncertainty. Prior to the sabotage, there was an uncertainty about what would happen next. Would Russia turn the taps back on? Would Germany suffer a cold winter? Or would Europe take a leap and invest in energy security? Once the pipelines were destroyed, however, that's all changed and it instantly became clear what would happen. Europe would have to invest into their energy security and endure a couple tough winters. Germany, the most important country with an over-reliance on Russian gas, had spent the better half of 2022 building up their reserves while they can, and according to most up-to-date estimates, they have enough to ensure no outright shortages over the coming winter. This removes a lot of the fear that markets were pricing in before, and with the uncertainty of what is coming next, gas prices have seemed to stabilize to a degree that most hadn't expected. Another immediately clear impact of this sabotage is this fact that this pipeline was an asset and it's now a non-functioning asset. In this sense at least, it's quite easy to get a grasp on how much wealth has been lost here, as the Russian government invested almost $11 billion into the pipelines over the last 2 decades, and as it's never going to be operational again, this is all lost as a sunk cost. Other countries contributed to that cost as well though, with both German and Finnish taxpayers coughing up to pay the bill. On this basis as well, there are investors who have lost money, and there are companies that will miss out on future revenue as well. There are employees who used to have jobs maintaining these pipelines who are now wondering where they will work next. And there's also the idea that didn't seem so absurd a few years ago of maybe even a third Nord Stream pipeline being created, or some other pipeline with a similar remit. In the wake of this sabotage though, all of these aspects contribute to the immediate costs of the explosions, ones that cannot be ignored even if they are incredibly difficult to measure. In terms of the economic impact over the next few years, the first thing to note is that there is no secure future for Russian gas exports in Europe, even if it flows through other pipelines that open back up, as the contract between East and West had a clause stating that if an unexpected event that is the fault of neither party should occur, the contract can be voided at no cost. We will also see energy sources for Europe, Germany and Italy in particular, change over the coming years as they try to fill the gap of gas imports from elsewhere. There are a few immediate options, the Baltic pipeline that just opened between Norway and Germany being one of the most credible, but liquid natural gas imports have been increasing and they could contribute massively to this shortfall. This will lead to consistently higher gas and therefore energy prices over the next few years, but no higher than the spikes we saw throughout 2022 when future supply was an unknown factor. A long cold winter is expected as people find themselves unable to afford to heat their homes, or the infrastructure and organizations unable to supply people's homes, but more recently this seems to be a slightly smaller problem than expected, as temperatures have been higher than usual, but it is still an issue this year, and next year it could be an entirely different problem. Unfortunately, the costs of these factors are also incredibly hard to pinpoint, but we can expect energy bills to be something like 10 to 20% higher than usual over the next few years, contributing to increased bills of hundreds of billions of euros. Over the long term, over the next few decades, costs get even more difficult to measure, but the factors are easy to spot. This change in energy supply needs investment, and that needs money. Wind farms are already popping up all over Europe, but their prevalence is only going to increase as the grid weans itself off of gas. Nuclear power plants are having their commissioning dates rolled back, or they're being brought back from the dead, or even just being built outright. Coal mines will probably see more action, not less, as will the plants which burn them, and this is going to impact every single European country. For large countries like Germany, France and the UK, we're looking at hundreds of billions of dollars each. Combine that with every other state across Europe, from Romania to Italy, and the cost is likely to reach into the trillions. Russia will certainly see an impact over the coming decades as well though, as they lose their most valuable customers and have to try and fill that gap. Pipelines to China are floating around being suggested, but China is a big proponent of energy security and they don't want to find themselves in a similar position to Europe in the 2010s. In all likelihood, we'll see Russia export more to minor nations who can't really buy from anyone else. Iran, North Korea, Mongolia and the like, an option to be sure, but a far cry from the goldmine that was Europe. That 80 billion euros every year was 20% of the Russian government's entire budget, and it was always going to be a massive hit to lose that. One thing to note here though, and a counterpoint to a lot of what I've just spoken about, is that it's hard to pinpoint all of these changes and costs to this sabotage itself. For example, had Russia never invaded Ukraine, this sabotage almost certainly wouldn't have happened, and even if the sabotage itself hadn't happened, well, Europe was already shifting their energy dependence away from Russia after tensions started rising. It's not really possible to quantify these effects and declare categorically that this all comes down to one event when there is so much more at play. There are also the positive impacts to come from this, and I know some of you will be thinking, what positives could you possibly be thinking of? Well, Europe used to import its energy and send money off to Russia. With domestic production seizing the throne, hundreds of thousands of jobs will be created within our countries, and corporations will spring up to service these new needs. This will generate wealth within Europe instead of within Russia, and so will actually contribute to our economies, not detract from them. Now, I would love to give you a concrete answer here, and some people have tried, but the various estimates range from $11 billion up to $2 or $3 trillion, showing just how difficult this is. Now, if you've been paying attention to the markets, you've probably seen how badly stocks are performing this year, and you might be thinking about diversifying your portfolio, or maybe you just want to hedge against inflation. Well, if that's the case, then you need to hear about this video's sponsor, Vaulted. Now, Vaulted is the best way for individual or even institutional investors to acquire physical gold with a great website and mobile app that makes it easier than it's ever been. They store and insure their one-to-one allocated gold in the Royal Canadian Mint. It's all certified conflict-free, and you can rest easy in the knowledge that you can request instant physical delivery of your gold holdings wherever or whenever you desire. Their prices are the best in the market because they store all of their gold at the manufacturer and they cut out all unnecessary middlemen. They don't charge any premium or spread when buying or selling you gold, and they are as transparent as possible, meaning there are absolutely no hidden fees. On top of all that, they even managed to put out a load of really interesting content keeping you updated on the world of gold. Now, if that sounds at all interesting to you, then I highly suggest you check Vaulted out. There's a link for you all down below in the comments and the description. Again, that's Vaulted with the link down below in the comments and description. The parties which actually suffer here are Europe in the short term and Russia in the long term. Europe, Italy and Germany in particular will have to suffer through some tough years as they work out how their energy infrastructure will work in the future, and while this winter is so far not looking like it's going to be a totally frozen one, it still won't be pleasant. Billions of dollars will need to be invested in new energy generation, from coal and oil plants to wind farms, nuclear plants, none of which comes cheap. Russia, on the other hand, will find its once never-ending tap of money from the West will have dried up forever, and while at the moment they are fine, seeing as they've made more than enough from their exports than usual in the run-up to the sabotage, as the years drag on, Russia will start to feel the hit of losing their biggest customer, and they will have to spend billions of dollars more on new infrastructure to replace their European clients. On the surface, it seems as though the US has the most to gain here. They benefit economically from Europe's forced separation from the Russian gas markets, as they can now fill that gap with liquid natural gas exports. They see their geopolitical allies further distance themselves from their own strategic opponents, and the mainstream narrative has been very strong in pointing blame towards Russia and ensuring that the average person thinks this was an act of Russian aggression, furthering support for NATO. Norway will also see some increased income as their pipeline to Germany usurps Nord Stream as the largest, but really, this pipeline was always going to be an economic success. The sabotage simply makes it a little bit of a bigger one. On the whole, this simple act of sabotage, probably carried out by a simple submarine and a team of divers, has cost the world tens of billions of dollars that is mostly just going ignored. As for who is actually culpable, that's something that I just don't know, and the reality is that no one online who claims to know the truth for 100% is actually telling the truth. We all have our suspicions and our assertions, but this event was steeped in mystery, and that will always be the case. What I do know is that even mentioning the fact that the US could be the guilty party here can be enough to warrant an attack from big tech and censorship. To help us reach new people and ensure the truth gets out, please like, comment and share this video with others. Alongside this video, I'll also be releasing a second video through Stoic Financial Freedom where I explain exactly what I think actually went on here with no holds barred. Stoic Financial Freedom is on a platform separate from big tech and immune to censorship, so I can talk about every topic that is off limits on YouTube, and with your membership you also get insight into my investments and buy and sell alerts and a direct message line to me myself, but we only offer one new place every single day, so I get a chance to speak to all new members directly, so whenever a video goes out you have to be quick, and until next time, stay stoic.